Welcome to another episode of Coffee with Caprill. Well, I hope you're doing well. When it comes to government, my general philosophy is that the government that governs the least governs the best. So, whenever the government institutes a new law, well, you got to start looking at it and ask yourself, well, how's this really going to affect me? What was interesting was the government recently passed an act called the Inflation Reduction Act. Now, what's interesting is you would think that a act that's all about reducing inflation would, well, that's all that would be in there. But no, it's not really about reducing inflation. All right. So what I wanted to do is I want to take you through what's in this bill, and then I'm going to get into the studies about whether or not it's going to reduce inflation. Now, warning: I'm not being political here. I'm not. Now, I did tell you that I'm not a big government guy. I'm not. I think history has shown that every attempt government has made to fix things usually makes them worse. But I don't want to get into a debate, right? It's not what this is about. This is just about letting you know what's there and then what to expect. Okay. So the first thing is there's a creation of 15% corporate minimum tax rate. So if a corporation has income, profit of at least $1 billion, they're going to have to pay a minimum tax rate of 15%. Now, what a lot of people fail to understand, particularly in the media, is that there's a difference between revenue and income. Revenue is all of the money that you're bringing in, but you're allowed to apply a lot of things against revenue that will reduce your taxable income. So somebody could have $5 billion worth of revenue and $9.5 billion of expenses, and then their profit, their income would only be 500 million, which means this law would not apply. Just be mindful of that. Okay. In every instance that I know of where big corporations aren't quote unquote paying taxes, it's simply because the tax code has afforded them a lot of options to reduce those um, their revenue, not the revenue, to reduce their tax. Because why? You're allowed to deduct things. You're allowed to deduct salaries. You're allowed to deduct the cost of goods sold. So there's so many things. Plus, very often governments will give corporations tax credits, which, by the way, is in this bill, to incentivize certain behaviors. All right. Then there's also prescription drug price reform, which is going to allow Medicare to negotiate the price of certain prescription drugs, which should bring down costs. Yeah, I don't know why they weren't allowed to negotiate in the first place. Seems silly to me. I mean, I think you'd want them to negotiate always. Let me save the best one for last. Yeah, Affordable Care Act subsidy extension. So a lot of people who are getting their health insurance, like me, through the Affordable Care Act, Obamacare, they can apply for subsidies to reduce their cost of premium. So that was going to run out. The amount of subsidies was going to run out. So they've extended that now, and that will extend through I think 2025. Okay. So for people of marginal income, they'll be able to get their health insurance at a lower cost. Then we've got something called the Energy Security and Climate Change Investments. This bill includes numerous investments meaning spending, okay, in climate protection, including tax credits. There we go again with credits for households to offset energy costs, investments in clean energy production, tax credits aimed at reducing carbon emissions. All right, I'm not going to get into that. I want to get into the best one: the IRS enforcement. 87,000 new agents will be added to the IRS. Okay, so what's that mean? Well, that means you're going to see audits go up considerably. And contrary to what they're going to tell you in the news, it's not going to be just the wealthy. In fact, the wealthy ain't going to have any problem being audited. You know why? They're already getting audited. It's already happening. All right. Promise you. Anybody who's making $10 million a year is getting audited every single year. Where they're going to go after? Primarily small businesses. Why? Because small businesses are usually filed as what we call a subchapter S corp. My business, for example, subchapter S corp. And what they're going to do is they're going to look at how you are doing two things. Number one, are you reporting all your revenue? And are you taking your deductions legally? Now, listen, I have no sympathy for tax cheats. Absolutely not. So, as much as I hate the idea of being audited every year, I know I'm about to get audited every year. That's fine. Come on in. In my line of work, everything is documented. I don't take a company car expense because I know it can be a little loosey goosey. I don't take a home office deduction, even though I know I could. I don't. I don't do a lot of things I could do. Why? Because I just don't think it's worth the hassle in the audit. So you're going to see a lot of people getting audited. That's not necessarily a bad thing. I mean, let's face it, the tax law is a tax law and it should be followed. But it's not going to be a bunch of billionaires. If you work for a corporation and you're just filing your taxes using your W 2, your 1099, you got nothing to worry about. It's those of us who have a little bit of interpretation available to us in terms of what is taxable, what's tax deductible, et cetera, that are going to get taxed. Now, the reason I'm bringing this up is because the name of the act is the Inflation Reduction Act. Okay. So, again, you would assume that now that we're close to double digit inflation, that somehow this is going to reduce inflation. Well, now there's a lot of studies, but I'm going to cite one here. Now, this was in Forbes, and they went to the Penn Wharton budget model, um, which is a nonpartisan think tank. It's associated with the University of Pennsylvania. Their general conclusion was that it was going to reduce inflation by 0.1%. It's not going to reduce inflation at all. The belief here is that by reducing the federal deficit, that inflation will go down simply because the government won't have to spend as much. Fortunately, it's not going to move the needle much. And the day the government stops spending, the only way we're going to cut inflation is either to shrink the money supply, which is what high interest rates are doing, or increase supply. And that won't happen until supply chains get fixed. Government can't do it. They're going to want you to think they can, but they can't. So to call something an Inflation Reduction Act when it doesn't, it's kind of Orwellian in its approach. Now, again, I don't care what administration proposes legislation. I'm always going to be critical of it. And in fact, I don't really think I've said anything about this that is good or bad. I actually can see some merit to having more IRS agents, believe it or not. Okay. Um, but just understand that it's probably not going to have quite the change. How is it going to affect you? Hard to say. I don't think inflation is going to be changed at all because of this. Certainly, if you can get credits for the Affordable Care Act, that's going to help you. And prescription drug prices, may come down now, which would be good for you as well if you're retired. The rest of it, I wouldn't get all that excited. The government really doesn't control things as much as they want. They can mess things up, but as far as making things better, I've yet to see too many things. So please, let's not get into a debate. I'm a cynic when it comes to matters of government. I just want you to be aware. But do your own research, okay? Google the Inflation Reduction Act, see what it is, what's out there. Read for yourself if you think it's going to make much of a change. It's going to do a number of things. I just have a real doubt that it's going to impact inflation. Take care.